It's earnings season, starting with the banks, a major test on how the economy is doing. And we also have some other stuff coming up to test it as well, along with a phase one trade deal happening tomorrow. Joining me to talk about that is Jonathan Corpina. So Jonathan, I'm taking a look at these bank headlines. They come in a little mixed. We do have this phase one trade deal that is going to apparently go forward with tomorrow. Now, apparently this has had a big impact on our economy and our industries. So what kind of implications has that had, and can we fix it?
I think coming into this week, clearly those are two things that we've been looking at: earnings season and phase one. I think we're still a little bit uncertain as to the ripple effects of phase one and how it is going to affect individual companies and individual sectors and kind of trickle down to the consumer. So a little bit of apprehension there. Yes, some optimism that we are moving in the right direction. We saw some headlines this morning. China's going to spend additional money on U.S. goods, all moving in the right place. But at this point, let's kind of walk very slowly to see how this whole thing plays out and what the implications are going to be.
So Jonathan, we are kicking into earnings season, the first one of 2020. How exciting. What kind of stocks are you looking out for?
I love the financials. You and I talked about that before. I like how a few years ago, Alcoa kind of shift out of that first name and the bellwether of earnings season and the indicator, and they shifted in the financials for that. So a day like today was real interesting. We've got a few more coming up, Goldman Sachs and a couple others later this week. I think that really gives us a good idea, a good barometer of what's happening, right? So, it talks... it ties into many different things, right? Our financial systems. It talks into trading. It talks to M&A deals and arbitrage situations. In addition, all these big corporations have their lending business, right? So how's their lending business? Where are they lending? How much is out there? Are those loans, continually growing and where are they being placed? So I think it does give us a pretty good idea of, what the larger banks are doing, how they're operating with other smaller banks, other smaller companies, and individuals. So earnings season always is fun to kick off with the financials. You said today, the earnings coming in that we got this morning, we're somewhat mixed, and historically mixed. If we're prepared for mixed, is okay on our markets. We've seen some volatility today, but it seems to quiet it down at this point.
And those metrics that you were talking about loan growth, etc. If they're doing well, that means we're doing well.
Yeah, I was talking to a colleague about that, and they were talking. Their take was, the loan numbers, this was yesterday, we have to look at the loan numbers and see if they're really increasing. And, my take is, well, we kind of want them to increase, right? Because money is so cheap, and you want these smaller mom and pop companies that are out there that have great ideas and have room for growth, but haven't had the access to capital at a price that works for their model, now have that ability with interest rates so low. So I actually kind of like to see these numbers rising a little higher and higher. We've learned a very expensive lesson back in 2008, 2009. So I think we're much smarter now about budgeting, loaning, debt, and how we're going to spend that within our own infrastructures.
That's great input. So the more the merrier.
I think so. I like that.
Thank you so much, guys. That is Jonathan Corpina reporting here at the New York Stock Exchange floor. Have a great Tuesday.